Hi everyone, this is Jason Burack of Wall Street for Main Street and managing editor of the News Doctors and independent financial journalist Eric Dubin. Welcome back to another Welcome to Dystopia podcast. This is episode number 32. Eric, glad to hear from you after your hiatus for about a month here.
Yeah, it's great to be back.
Now, Eric, we've had some interesting movement in the gold and silver market. There's been a big divergence between mining shares and metals prices for a while. Some of our listeners have commented that they don't think the bullion banks, which, you know, there's documented evidence now that they've manipulated gold and silver. There's a lot of it. But they don't. Some of our listeners have said that they don't think they manipulate mining shares. What's your opinion of this?
Well, I mean, in a broader context, we see pretty much all major markets manipulated, and no one really debates whether or not the bond market is managed. And in fact, that's open public policy with, Federal Reserve buying $45 trillion worth of U.S. Treasuries for many, many months under QE3, et cetera, et cetera. So, that kind of stuff is not even open for debate. It's part of public policy. And then there's widespread understanding of what is done in terms of support of the S&P 500 during times of duress. People don't question that equities are purchased when the powers that be are trying to manage what is, in fact, basically our hyper-levered system that has gotten pretty much out of control. We keep going through these big bubble periods. You can go back decades, but the most clear beginning point that people can see is, the NASDAQ bubble creating a gigantic crash, which was reflated by the real estate / banking system bubble that had created the crash of 2008, and then the reflation that we saw thereafter. And, to debate whether or not there's active participation in equities markets when it comes to big S&P 500 universe or the Swiss National Bank owning more stock of Apple than any other entity in the entire world, or on and on. Why would it be so confusing or unbelievable to people to believe that mining shares are the play toys for the part of the management of our system and keeping all of these balls up in the air? It's kind of surprising that people would be skeptical that manipulation would stop at the edge of mining shares. Point being, in the last 2 weeks, we have seen mining shares kind of just have a really hard time, and they have been under pressure, while gold in particular, and silver also, but more importantly because of the significance of what gold represents in terms of, the big global macro conditions and how it impacts other markets like the bond market and the relation with FX markets, the dollar and all of that, that gold was getting a huge bid. And it was by Thursday through Friday morning of last week, we're recording this on March 3rd, and last week we saw gold finally get over $12.50. And that was, and silver was over 18, and both of those dynamics were happening, clearly indicating that precious metals were beginning to get over significant technical levels because of the momentum that has been building, because of the fundamentals in the sector being so overwhelmingly strong. We've had basically an alternative reality attempted to be painted by the interests that don't want competition to the fiat paradigm expressing itself, to the point where the mainstream media has been trying to claim that China's demand for gold has been falling, and the World Gold Council would put out reports speaking to 20 tons of gold roughly being purchased in December, when the reality is that it was an order of magnitude bigger than that. And we know this for an absolute fact based on over 150 metric tons flowing out of Swiss refineries, which have very high level reporting, and it's exported, so the documents for that are they're public documents. We can see it. And all that gold flowing into China is but one clear-cut indication of how strong physical demand for gold has been. And it's the physical markets that end up wagging the paper dog of COMEX and LBMA. A couple of weeks back, we saw really interesting trading dynamics where timed to correspond with right going into the LBMA's gold PM fix, that gold leaped higher after being pressured all day, and that kind of action is prima facie evidence of a stronger physical market, because the gold price benchmark of the LBMA's PM fix is still an important benchmark to allocate physical gold, and there were demands on offtake for physical gold that day, and that's part of this whole process of what I just described with China. And so all of these things are visible in the market. Anyone who has the experience to look with eyes of decades of experience of looking at what goes on with intra-market dynamics can see the story that the fake media, Bloomberg and CNBC universe try to intermediate in terms of an alternative reality. We have gone through a period where the precious metals have been experiencing upward momentum, and they were not able to stop that upward momentum, such that last Thursday gold through Friday morning got over 1250. And all the while, stocks in the mining sector were suffering. And then, come this week, we saw pretty significant hits to the broad sector of mining shares, and gold and silver still were performing reasonably well. This was even before Trump's Tuesday appearance on Congress talking about the $1 trillion infrastructure plan and all of the various things that people have all known about for, even going back to the campaign trail. But people made the case that the shift that we saw in psychology this week and the change in the miners was all just because of the expectations that we would see ultimately higher interest rates because of crowding out phenomenon with investment, pushing up economic activity, dollar rising, all of that being negative for gold, and then the Fed being forced to raise interest rates with the probability of the FOMC doing a hike on the 14th/15th for their next meeting, going much, much higher in terms of market expectations. And all of that was a major factor on Tuesday for what we saw in the bombing of shares in the precious metal space. But the bombing was going on even before that. I was talking about this kind of stuff with Dave Kranzler last Friday when we recorded the Silver Doctors SD Metals and Markets show. And there are times when, because the general goal of trying to curtail momentum in gold is difficult for the managers, the central planners, the people in the Fed, et cetera, that try to execute that kind of management of upward momentum. Sometimes it's just really difficult for them to have any headway because there's just too much demand for gold, and that's exactly what we have been seeing. So what do? Well, they try to attack sentiment around the edges. And when we go through a period of 2 weeks where precious metals, bullion's still going up, but the miners are beginning to show weakness, precisely because of the kind of momentum and huge move that they've already made, it's easier for the powers that be to attack a segment of the market so as to begin the process of trying to attack sentiment. That's what we saw. Talked about this even before Trump's speech, and people were trying to say it was a Trump speech reaction, and it was happening even before Trump's speech. And lo and behold, by Thursday, after you can look at GDX or GDXJ, or even JNUG is a magnification of GDXJ times 3 for a wonderful looking glass into sentiment. And GDX or JNUG was more than halved from its high from recent trading weeks. And that attack is an attempt to shift the psychology of the more speculative segment of investors participating and chasing after precious metals. Markets are made up of different segments. The precious metals market has traders that focus strictly on COMEX. You have traders that are largely more focused on paper derivatives like GLD and ETFs like GDX, GDXJ, JNUG. And then you have bullion traders and bullion stackers and all of these various segments, and even, the sovereign buyers, the Chinas and Russias of the world that have been the backbone of why gold has been so solid. These are different market segments, and if you're trying to execute a shift in overall gold pricing and you can't go up against China because they're a whale, what do? Over and over, we've seen this over the last decade plus, where there are rotations in markets where targeting of miners may be going on one period of time, or targeting of silver may be going on one period of time. This is just how things have been done in terms of managing precious metals overall. And then the last 2 weeks, what we saw was some pressure on the miners. And it was if you look at the early part of this week, the pressure was intense. And then by the time silver trading unfolded on the COMEX just yesterday, we saw over 30,000 contracts traded in 40 minutes, representing something like 150 million paper ounces of silver bombed on the COMEX. And it was able to be executed because the sentiment was a little shaken up previously by what was done to the miners. It's a sequence, and this is what happened. And whether or not people see this or not, and that's just the way the cookie crumbles. But that's what happened this week, and the proof is easily to be seen if you look at the sequence of how intra-trading market dynamics unfolded over a bigger picture of time. People would make the argument that the miners were just simply selling off and consolidating after a big move, but that was occurring when gold was moving from 1,200 and change all the way up to getting a breakout over 1,250. And the breakout of 1,250 was highly significant because that's when the market would send the further confirmation to traders that were looking to go even longer. And all the while, pressure on the miners was happening. That is a sequence that betrays what is going on, looking at the different pricing in different markets.
Well, I've been paying attention to the gold and silver markets now for almost a decade. I know it's crazy it seems that long. But, I've been trying to pay attention and learn more about the manipulation. I started learning about this through Ed Steer's free gold and silver daily newsletter. But, this divergence, I think what is being done is to cast doubt with the hedge funds and the high-frequency trading algorithm guys that, look, in order for the gold and silver price, yes, it's moving higher, but the miners have to confirm the breakout. So if you're a chart trader and you're considering putting large positions in, you want to see the miners confirm the breakout, right? So I think the people who manipulate these markets, and Eric, now I think unfortunately we've gotten to the point with intervention and central planning, global central bankers, where they're basically manipulating every single market now. Now, obviously, yeah. I think they care about certain markets more than others. There's documented proof that LIBOR has been manipulated. They've manipulated interest rates. They've manipulated bond markets. Currency exchange rates from one currency to another are normally manipulated now on a daily basis. Just last week, for an example of this, there was a over 5% move in one day in the Australian dollar against the US dollar. It moved over 5%, and then intraday, Eric, it moved 5% the other way. So I think that was the central bank saying, oh shit, it moved too much. It moved too much. The market moves it too much. We have to move the seesaw back the other way. I picture sometimes as Janet Yellen and her band of misfits at the Federal Reserve, these PhD Keynesian economists, as, incompetent Keebler elves trying to, run around and screw things up like on the, cartoons. But yeah, I think everything is manipulated. I think we know from Alan Greenspan's testimony that they do pay attention to gold and silver markets. And obviously, with divergences, one of the ways to stop a big move higher, to knock silver down and prevent it from staying above 18, to prevent gold from going way above 1250, is to put pressure on the miners. And like you said, the miners are a smaller market, so they can do that with even less money than it would require to stop gold and silver necessarily.
Yeah, and they're not also going after markets where there's a counterparty like China hovering up, 150 plus metric tons market value of gold in December. I mean, that's a huge buyer. And that's precisely why gold, in fact, has been having the momentum that it has demonstrated. I mean, it wasn't all that long ago, after the Trump victory and all of the carnage that hit the precious metals sector, that people were running around with their hair on fire thinking that, we're going to see gold hit below 1,000 and so forth. So, I mean, the entire shift has happened, and the momentum that's been in the precious metal space has gotten to the point where the authorities trying to protect the paradigm of the fiat system and the banking system and all that entails, we're really beginning to lose control.
Well, Eric, Harry Dent said a couple weeks ago on a Chris Martinson podcast that gold would be at 700 or lower in a matter of weeks. So you don't think Harry's going to be right?
I think Harry Dent's understanding of deflation, in fact, is disingenuous. Gold performs reasonably well historically during most deflations, and it performed fantastically in the 1930s. And he selectively edits market history and claims himself to be a market historian. So enough said.
Yeah, I know for a fact that David McIlvaney presented Roy Jastrom's The Golden Constant at one of his conferences years ago, outlining how well gold does during a deflation, how people want physical gold outside the market for counterparty risk, and how gold did very well. And, you know, he just totally ignored that. But I want to talk about, before we move on from the gold and silver market, you know, we're at almost 18 silver right now. I haven't checked the price in the last couple minutes, and gold's around 1230 something. You know, we're at gold and silver prices. There's been Bloomberg articles recently. There was one in December talking about how primary gold miners during the bear market from 2011 to the end of 2015 did not really have any money to replace any of their reserves. So they high graded their assets, and they barely have they've been able to cut costs to the bone to survive, but long term this has made their mines very uneconomic, and they haven't replaced any of their reserves. So the gold miners, the margins that these guys have, some of them are making decent margins in gold, but the primary silver miners, I think the lowest cost silver miner, Eric, is only making $4 or $5 an ounce of margin. That's not enough, you know, to reinvest in the business and go and find new silver mines. Maybe it's a little bit of an exploration budget. Dividends have been slashed to the bone. If you're only making $4 or $5 an ounce right now margin, it's not very good. And that's just the lowest cost producer. There's a good amount of primary silver producers right now, Eric, that are only making $1 or $2 an ounce in margin, which is, you know, barely delaying bankruptcy if you have a lot of debt on the balance sheet. So there was another Bloomberg article this week, and it was based on an interview from the CEO of Franco-Nevada, and he was talking about the problems with replacing reserves for the gold mining industry, and that's just to keep production at current levels. We're pulling 90 million ounces a year out of the ground, Eric, for gold mining production, and that's very expensive to replace. He basically said, the CEO of Franco-Nevada, he has more capital basically to fund gold mining than almost any other company in the world, and he, other than basically the Chinese government, and he basically said that, you know, the gold mining industry can't have any growth. He's like, almost all the projects that they've been looking at they're very high cost, they're not a low cost operation, and they're very high capex. So the industry is going to be forced, he said, over the next few years to invest in these just to replace the reserves, because they haven't spent the money to reinvest in drilling and expanding the resource and reserves at current mines. So we're going to have a problem here going forward where, you know, I don't think we're going to be able to sustain 1250 gold, 1230 gold or 18 silver. You know, 4 or 5 years from now, there's no way we're going to be able to, as long as the demand for physical metal, Eric, either stays at these levels or go higher. There's no way the mining industry is going to be able to replace the reserves they're mining now at those prices. It's going to have to be a lot higher in the future.
Yeah, you and I have been talking about this from our very first shows, and now we're beginning to see all this play out. Franco-Nevada is a very large company, so in order to move the needle, they have to put a lot of dollars to work because they're large, and now they're talking about something like 20% of their investments having outside of the precious metal space, simply because they just can't get enough good deals to move the needle because of the state of the industry today. Yep. And that is just one other indication of how screwed up the whole mining sector has become on account of the price management manipulation that, you know, Western governments have led and interests that work with them. And it has completely screwed up the precious metals industry long term, which means that we're going to have higher prices. The physical market over time wags the paper market dog. The dog protests a lot, barks all the while. We see manipulation, and it scares the Jesus out of people, and people sometimes throw up their hands and think, oh, gosh, you know, why do I even bother messing with the precious metals markets as investments? Because you can't get anywhere because it's all manipulated, and never shall we ever make progress, et cetera, et cetera. We, you know, the people get downright despondent, but we are no longer sitting with 1,000 handle on gold. We're in the 1,200 handle, and we are going to go a lot higher because of multiple dynamics. I mean, we got the inflation pressures coming down the pike, combined with the backdrop of a banking system that has continued rot and all of the deflation risks and credit quality risks that represents, and all of this whole nonsense about the Federal Reserve raising interest rates and that being bad for gold, and even people like Stanley Druckenmiller, brilliant though he may be, completely divorcing themselves from market history and the fact that gold does perform well during periods of rising interest rates and even periods where the dollar even goes up. There's we're living in a bizarro world where everything has become so Orwellian, twisted around that even market professionals don't even know they're certain part of their anatomy from a hole in the ground, and people get away from it because we don't have financial media anymore.
Well, yeah, they're just like the regular mainstream media. They're incredibly biased. They're not doing objective, unbiased reporting. Not that it's very hard to be completely unbiased, but I mean they're not making any effort at all at this stage. But the point you brought up about the Franco-Nevada CEO, I mean, there's lots of gold mining projects out there that are looking to raise money, but the mines, in order to be built, they can't be economic until gold's at 15 or 1600. So you're not going to see smart, prudent companies that do good research and due diligence on a project like Franco-Nevada invest now in a deal where the mine can't be economic with the counterparty at 15 until the gold's at 15 or 1600. So almost all the future gold mines right now, and there's a few exceptions to this, obviously, like Pretium, which is going into production, Pretium Resources now. There's a few of these, but there's not many. But the majority of potentially new gold mines going forward, they need $1,500 or $1,600 gold. And the majority of new potential silver mines going forward, Eric, they need 25 to 30 silver. So something has to give. As long as there's demand for physical and we don't see a big drop off in physical demand, obviously with more above ground gold, because gold isn't used in industry nearly as much as silver, and there's a big stockpile above ground gold. It's a little bit different with the supply and demand fundamentals. So I think silver will benefit from this more than gold, because silver isn't that easy to recycle the way it's used in industrial purposes. So I think we're going to see probably easily in the next 2 or 3 years, we're going to have to see $25, $30 an ounce silver just on a supply side argument there for a reserve replacement. Because a lot of these miners, primary silver miners, Eric, brought on new silver mines from 2009 to 2012, and they've been able to lower the cost, but now they burned through the reserves, they've high-graded the things, and maybe it's eking out a little bit. I made some of the numbers there about how much an ounce of free cash flow they're making, which is not a lot, and in order to keep their production the same or grow it, the amount of costs going forward are going to be very, very high. So something's going to have to give, and it's probably going to be the price.
Oh, absolutely. I mean, price ultimately in the physical markets will be necessary to allocate supply. And the longer-term dynamics here are such that we are going to see much, much higher prices for precious metals. I mean, we just outlined the case of what's going on in terms of the mining industry and how that hooks up to the market in the final analysis. But, even in the bigger picture context of things like how trends with United States debt evolves over time, exponential growth, and how that ultimately demands higher gold prices relative to the depreciating value of the U.S. dollar, and the whole notion of interest rates and how there are periods where interest rates, in fact, do rise concomitant with rising dollar and rising gold prices. People just don't even know this history. I recommend that our listeners go to thenewsdoctors.com and look at the article I published today. It's the latest article up there. It's got a summary of market recap of various things that are going on, and various analysts that have spoken this week about assessing what has happened, from Eric Sprott and Craig Hemke and so forth. And one of the articles that I have linked in there is a wonderful article by Craig Hemke talking about these very dynamics where, we saw 2015 December Federal Reserve hikes rates. 2016 December, again. What happens? Both times gold went up, not down. The expectations of the forward-looking dot curve with 4 or 5 interest rates hikes expected at the beginning of last year, and same kind of thing as propaganda being proffered this time around. And what happens? We see the precious metals take off after having hit the bottom of the end of the year cycle, where, and yes, manipulation being part of what was causing the crash in the first place. The reality is that financial media and many analysts and many fund managers like to paint a picture about what happens with these long-term cycles that are just not true. The reality is that as debt increases and the level of financial soundness of major governments like the United States and the U.S. Treasury's position deteriorate, and the Federal Reserve's balance sheet explodes after every time we have these bubbles, and the most recent being over $4 trillion added to the Federal Reserve's balance sheet as they bailed out the financial system. We are now standing at the longest duration economic cycle of so-called growth, which basically died in 2014. That's another subject for another day. We've talked about that ad nauseum. And here we are, where we have this artificial priming of the pump with tax incentives and the infrastructure spend plans and so forth coming down the pike at a time when we've already had 8+ years of suspended animation of economic activity. And what's going to happen at some point later this year, as interest rates rise, as the inflation expectations rise, it'll curtail market expectations to the point of people pricing in what happens after the economic artificial boom that comes from the infrastructure spend, tax incentives, plans, and deregulation, et cetera. And the next recession will come. The Federal Reserve won't have much dry powder. And what do we see? Well, analysts right now looking at this reality and pontificating about how, maybe the Federal Reserve is going to have to launch another QE program north of $1 trillion. And that's where people are thinking. And if you're going, we'll have many analysts making the argument that gold will continue to suffer under conditions where the next bailouts will happen. I mean, it's an artificial reality that people are living in. They just do not understand market history.
Do you think Yellen would actually be willing to print $1 trillion for Trump and help him out, or do you think she might not have a choice? Because it seems to me she really hates him. The Federal Reserve. I'm reading Danielle DiMartino Booth's book, Fed Up right now, almost done with it. I've had her on for an interview on the Wall Street for Main Street podcast a couple months ago. She'll be back on as of right now next week to talk about her book more. But, the Federal Reserve, these guys are heavily politicized. They claim to be independent. They claim to not deal with politicians. We know from the history how Arthur Burns was bullied by President Richard Nixon, and we know how, basically Ben Bernanke was basically felt forced by Wall Street to print all that money. And we know a lot of the people who are there was a Federal Reserve economist, Lael Brainerd, I think, who actually got caught donating money to Hillary Clinton, and she had been in different Democratic administrations. And we know from Danielle's book now, which I recommend everyone go out and read if they want to learn basically the Wizard of Oz, what's really behind the curtain, how bureaucratic and politicized and ridiculous in a lot of ways the Federal Reserve is. Go and buy her book and read. I'm reading it on audiobook on Audible. I really don't think they would want to help Trump out. So, she may be willing to raise interest rates 2 or 3 times in 2017 just to spite Trump and say, look, Trump was claiming that the stock market was going higher because of him. It crashed. Now it's his fault. And, then that means Trump is limited to 1 term. So that may be part of why she's, besides her saying, our models say we have to raise now, which is what she was claiming today and she's been claiming for the last few weeks.
Yeah, well, the Fed is a responsive animal. It is really not, and half the time they don't even know what the heck they're doing. So they're going to be forced by the market to raise interest rates this year just because of the fact that, we'll have inflation expectations building. So that's part of it. There's also the dollar shortage dynamic we've talked about in other shows.
That's so
we
ridiculous.
Probably don't want to dive into. We don't
Well,
want to dive into that because that's a big subject. We've talked about that before. But the bottom line is that, yes, the Fed will have to raise interest rates modestly this year, and then the market's going to start breaking in part because of their raising interest rates and other dynamics interfacing with that. And at some point, it's likely that, the interests behind the banking system will clamor for more liquidity. And yes, Yellen is known to be anti-Trump, and Trump also has basically hinted at the prospects of shaking up the Fed and not renominating Yellen. And even on the campaign trail, there were times when he hinted at him outright sacking her.
Well,
what will be interesting is in the coming weeks when there are nominations filled for Federal Reserve Board members, that'll be telling because Trump's hand will be shown. And we'll get a lot of insight in terms of what his thinking is when they actually make nomination suggestions and put people in place.
yeah,
But
I'm very interested in that too.
I don't think that the Fed is by and large a reactive animal, and so they'll just be responding to what happens in markets and politics and led by the nose as things evolve.
I really think that that Trump wants a weaker dollar, it seems, but his policies, they may mix together and jamble and create a lot worse stagflation in the real economy, and he may not get the weaker dollar that he really wants. Yellen is very interesting at this point, what she decides to do. Trump actually can't fire her. He's not allowed to, but he just can't renew her term. But those three people that he can bring on, I think it'll be very telling, but, it's not going to potentially stop a March rate hike, but it may be able to stop the next couple rate hikes after that. But I think, Trump is inheriting such a large mess, and Yellen's, these Keynesian models, these predictive models the Keynesians have, and Yellen's a very hardcore Keynesian. After you read Danielle's book, you'll see how hardcore Keynesian she is. In fact, she kicked Milton Friedman out during a celebration when he was 80 years old out of the San Francisco Federal Reserve building because Milton Friedman wasn't, pro regulation enough. So that's how hardcore Keynesian Yellen is. It's really funny. So it'll be interesting to see if Yellen actually has the cojones to raise 3 or 4 times in 2017. If that does, that's going to cause this overvalued stock market to potentially crash. I think we could see, I interviewed Peter Bachvar today on Friday, March 3rd, and he thinks, there could be over a 27% crash in the stock market in 2017 or 2018, because he said the last time there was a move that big was Ronald Reagan, I think, and he said there was S&P, the Dow was trading at 8 times earnings, and now the Dow's trading at 25 times earnings. So there's a number of good articles out there, Eric. Michael Leibowitz of 720 Global, our friend, he's been on the show. He put out a piece this week saying that this is one of the 3 most overvalued times in the history of the stock market. He was comparing it to 1929, 2007, and 1999. And Peter Bachvar, in my interview earlier today, said very similar things as well. What's your opinion about the valuations of the stock market?
I lived through the 2000 crash in NASDAQ, and what we saw in the NASDAQ valuation subcomponent and how that spilled over to the S&P 500 universe was a little bit different than what we're seeing now. We had, the NASDAQ at a far higher valuation and overvaluation than 25 times trailing earnings on, Dow 30 stock universe. But we have different bubbles this time around that interface with the stock market bubble. And the biggest of them all is the bond market. The bond market bubble, though it has pulled back a little bit and some of the dangerous air has been let out of it such that it's not as quite as explosive as it was at an earlier point, it still is nonetheless the biggest market bubble that has ever been created in world history, period. And that is backdrop. In fact, part of the reason why we have the S&P 500 universe and other world major markets around the world being majorly overvalued in the equity universe is precisely because of the cheap credit that has been available to companies and their treasuries to go out and purchase over $1 trillion worth of stock to retire, to boost earnings per share artificially based on the fact that they could borrow money from the Federal Reserve System at near zero interest rates. And that is what happens when you have bubble markets. They create gigantic distortions in pretty much everything. And the bond market being the biggest bubble of all over the last period since we've tried to resuscitate the crash of 2008 has impacted everything. So we have multiple bubbles, just as we had different kind of conditions in the 2000 period crash with the tech bubble leading as the tip of the spear of the problems of that day. Today, we have an inflated housing market. We have the bond market having major distortions that continue, and then the stock market trading at 25 times trailing earnings, and the financial engineering that has gone to produce those earnings as well. And it's explosive. And what's going to happen? I've been saying for better part of 2 years now that we were entering into a crisis window, and that as of last fall, it was very clear to me that this year we're going to see bare minimum 20% correction in the S&P 500 equity universe. And we've had this kind of hopium trade in the equity space riding on the back of expectations of positive economic development coming out of Trump's policies. And the level of expectations is just downright nutty, combined with a suppression of volatility where, you can look at things like the VIX index and see unbelievable sleepiness in the markets, complacency that is so dangerous. I mean, it won't take that much for any kind of catalyst to enter into the picture and begin to shift things pretty significantly. I mean, maybe it comes on the front between the United States and China and how currency war may involve, and you pick your poison. There are just 5 black swans waiting to flap their wings and poop on the S&P 500.
Eric, I think a trade war with tariffs and protectionism would be more dangerous necessarily than just currency exchange rates with the U.S. and China, because
it'd be one and the same. It'd be a package 1-2 punch.
Yeah,
they'd be related. If both would happen. As Trump raises expectations for friction with trade against China, China can retaliate and manipulate or let their currency devalue further at a faster rate. I mean,
or increase taxes on U.S. imported goods even higher, because there's already a VAT tax on some, so they could do both, a double whammy. And the U.S. consumer and saver, people in the U.S. And people in China who don't like their government, they're getting screwed. But if I could add to your other points there, I mean, there's been over $1 trillion since 2009 in large corporate share buybacks with debt. So this is not with free cash flow. This is with debt. This is borrowing, taking advantage of cheap debt to goose earnings and trigger your share options packages. So people are buying back the stock. This has started to slow somewhat. I think the growth in share buybacks has dropped 28% in the last 12 months. So it is slowing, but it's been absolutely massive since 2009 because of these artificially cheap interest rates and how these corporations have had, the Wall Street investment banks calling them up and such easy access to credit that they've done over $1 trillion, like I said, in share buybacks. And this is hurting. Let me give you an example here. This is hurting the oil industry probably the most out of all the other industries because it's so cyclical and the commodity price can fall. The oil industry, the oil majors like ExxonMobil, Chevron, these guys, the oil price since 2011, Eric, has fallen quite a lot. Oil was triple digits back then. And yet the oil majors, despite a lower commodity price, they've been forcing their butts to cut costs. But the large cap oil stocks, their cost, there was a great article on this in oilprice.com a couple days ago this week, and their costs have still risen 66% since 2011. And one of the major reasons is because they have bad balance sheets. So they've been buying back their stock even at very high valuations when the oil price was higher. They weren't doing it with free cash flow. They were doing it with cheap debt. And as the oil price was going lower, they were still buying back their stock all the way down. So you're in a situation now where they haven't made their business more efficient. They haven't done acquisitions, smart ones, at a low oil price and expanded their business because now their balance sheets are loaded with debt and they bought back the stock. So the oil industry appears to be the large cap oil ones like Shell Oil and ExxonMobil appear to be in the worst shape with this, with the share buybacks right now out of all the large caps.
In the grand scheme of things, we've had one bubble create a new bubble, or at least, contribute to the stock market bubble. Yeah, echo bubble.
An echo bubble, or an aftershock, because you and me are both from California, so we know when there's an earthquake, we normally have aftershocks after that.
Duck and cover.
Well, other examples of inflation, Costco just announced that they raised their membership prices by 6%, and a lot of it is because of, there's an article on Wolf Street about this. If you guys want to check it out, Eric can attach that link to the article in the show notes. So Costco is basically saying, without their membership fees, their business wouldn't be profitable at all. If you're familiar with that, that's a very Main Street business. A lot of people listen to this show, shop at Costco. I think it's a great value, warehouse wholesale prices. If you buy in bulk, you can get good deals there. But, when you go and buy individual items there, Costco doesn't make very much money off each individual item. They make the money off the membership fees. That's where they generate free cash flow. So, when Costco has to raise prices and how they're having higher input costs, that things are starting, inflation is really starting to pick up in the system. The other inflationary thing I saw, Eric, with inflationary expectations, did you see, is that in the beige book that the Federal Reserve was releasing, that a lot of business owners now are reporting that they expect inflation to start picking up. So that means inflationary expectations are picking up, which means velocity of money could start to pick up as well in the near future.
Yeah, that, and also just the ongoing drumbeat about the jobs front being more solid, and part of what they report is a reflection of a tighter market because a lot of people have simply dropped out of the labor force, millions and millions in the last economic downturn after the 2008 crash. But the expectations for a tighter labor market for those who remain employed will in fact contribute to tighter monetary policy in the long run, and that's one of the excuses that the Federal Reserve will be using to hike short-term interest rates.
Eric, I think if President Trump is successful with getting his tax cuts plan passed through Congress, if he's successful with, cutting 2 regulations for every new one passed, these things are going to take a couple years probably. They're not going to happen right away for him to get these things passed, and cutting Obamacare and other taxes and rules and regulations. These are going to help small and medium-sized businesses in the long run. People are going to want to invest, and this is going to create jobs, which could also, create demand pull inflation as well, which would be wage growth. There would be more long-term jobs created. So we'll see if Trump is successful at this. This is probably one of the bright things about Trump going forward. But, his $54 billion on military spending, I'm kind of worried about that. So I think it's good that he was looking for ways to cut costs in these other government agencies. But then when he announced, he was going to instead spend it all in the military, that's worrisome to me.
Yeah, well, the whole debate about the fiscal budget mess is going to come front and center later this month. We have the March 15th debt ceiling debate in Congress, where Congress is going to have to raise the debt limit. And then later this year, as that unfolds, we will have once again a lot of focus in the financial media, which frankly they're ignoring that story right now, that will focus on the long-term viability of the United States fiscal position and how it must in turn also require higher interest rates because of the level of debt. I mean, the whole notion of central bankers constantly having the back of anyone that would dare to purchase a long-term 10-year bond in the United States Treasury and clip coupons when interest rates are so trivial that they don't even exceed, nominal inflation, never mind real inflation, and never mind the fact that inflation statistics are all BS. And it's almost surreal how crazy things have become. So, all of that, we know what happened when, the whole government shutdown drama had happened and the fight with the budget a couple years back. We know what happened when Standard & Poor's downgraded the United States debt from AAA to AA because of these kind of dynamics.
This was 2011, and the gold price was at 1,900, and then there had to be a huge intervention to knock the gold price back down. Yes, I remember this very well.
part of the reason why we're seeing gold attacked right now is in anticipation of the crazy debate that's going to happen on the political front in relation to the debt ceiling and the arguments that will come with that. So, this is all interrelated. All markets are connected, and politics is the layer that wraps around them.
The Democrats may hold out and not even vote. They're blocking so many of Trump's cabinet people still. The games the Democrats are playing, we saw this on Tuesday, how they wouldn't even clap about the economy and how he was creating some jobs there. So, I mean, it's crazy, the gamesmanship. But what worries me, though, is long-term how much power the president has now with these executive orders. So I don't think Trump's going to be a dictator necessarily, but the guys that can come, the future presidents that come after Trump, we could see a total tyrannical dictator with the power now the president has to just basically go totally over Congress's head, because Congress is so busy, being corrupt and into really weird habits and spending time and money fundraising to get reelected, that Congress originally Congress, I would say, by the founders, had the most power, more than even the president. Congress collectively had the most power out of any of the branches of the government in the Constitution. And yet here they are, Congress has delegated so much of this power basically to the president, where the executive now has so much more power than was originally intended.
Checks and balances have largely been flushed down the toilet, and then when you add on your regulatory state, I mean, any given average year you have 80,000 regulations through the administrative state, rules from the EPA, rules from all the executive branches and so forth, being, 20 times the number of laws that are actually passed by senators and congresspeople. The growth of government is largely based on a regulatory apparatus, and it's growing like crazy.
Yeah, and we were talking about David Stockman's interview on Greg Hunter, USA Watchdog. He was talking about how a lot of government growth is already baked into the cake before Trump even took office.
That's right.
Yeah, so there's a lot more. Obama left Trump basically, like that dog owner who let his dog, poop on the grass and didn't pick it up. He left Trump, a poor schmuck, to step in it. There's all these accidents and messes he's inheriting that, Trump's going to be inherited with an even bigger mess because of, obviously, the guys before Obama, the other presidents, didn't do a good job of this either. But, Obama doubled the debt in his 8 years.
Yeah, and presidents before that, nearly doubled every term, every 8 years or what have you. I mean, this is not a Democratic partisan Republican debate. This is a matter of just the nature of our system.
Yeah, I mean, the system, the status quo, I mean, both political parties are the regular Republicans like Paul Ryan and John McCain and Lindsey Graham, and then the Democrats like Nancy Pelosi and Barney Frank, these guys, and Schumer, these guys are corrupt scumbags, all of them. Like, a lot of them are into some very weird stuff, and I heard rumors that, the FBI potentially could be listing them all in a pedophile scheme. So we'll have to see what comes in the future. I think that's one of the reasons, Eric, why they were fighting Jeff Sessions so much and trying to get rid of him, is because he's supposed to go after and actually prosecute these guys going forward. We've seen just an enormous amount of arrests from the pedophile scheme, like lower level ones in California and Norway and other areas. I don't want to talk about Pizzagate too much, but I want to ask you about, we have a couple more topics, two more quick topics before we get to the scumbag nominees. Do you have any opinions on Trump's first month plus in office, positives, negatives, maybe a quick report card for a couple minutes?
Well, I mean, more negative in terms of my hopes for his administration to be more of a reforming administration have been dashed based on, not entirely by his own doing, but the warfare that is being launched and levied upon him by the deep state. That whole kerfuffle about Michael T. Flynn, the national security advisor, who are having basically generic conversations with the Russian ambassador and speaking about what are things that were not deemed illegal. The transcript has been reviewed, and what we now know is that he didn't do anything illegal, but it was a political football that was tossed into or grenade, perhaps better described, tossed into the whole mainstream media mix of this hyper-pressurized partisan battle that's going on. And, Michael T. Flynn, though he had lots and lots of flaws and is basically a mother hen of the military-industrial complex and so forth. I mean, I'm not trying to paint him as some angel or whatever, but in the very least, he wasn't a neocon. And he wasn't interested in having a rebooting of a Cold War with Russia. And that kind of sabotage efforts by the deep state are really disheartening to see. And, from a foreign policy point of view, I think that what's going on with the whole Trump administration definitely is disturbing, and that people who pay attention to these kind of things need to hold the administration's feet to the fire. There are other aspects that are deeply disturbing about Trump, particularly on the civil liberties front, and what he may be doing as somebody who, generally speaking, can be fairly described as a law and order president, and how that might hook up with how he would respond to crises in the United States. Whether if we do have a financial crash, the federal government's going to be pretty onerous when it comes to how it relates to people, and maybe we'll even see things like greater efforts for a cashless society upon the next crash. And Trump and his administration, simply because of the nature of what circumstances he will find himself in, might surprise the heck out of people who are more libertarian-leaning, who have had hopes that Trump would be a positive reformer, and then all of a sudden recognize that, oh, geez, he's going to be pretty damn hard when it comes to things on the civil liberties front. And we can go on, and it's productive to see the kind of reforms that he's speaking about when it comes to dialing back regulations, cutting taxes. A lot of his domestic policies do make sense. But we are living in such a divisive kind of culture where people aren't even having rational discussions, and they're all informed by fake news from the mainstream media, and object reality has been turned on its head, and people are largely yelling at each other rather than them trying to understand what is, in fact, the nature of our situation in this country. And
Excellent
it's explosive.
It's
explosive.
I was actually just got an email yesterday from one of the dating apps I'm on, and they did a survey saying that single women in my age demographic, or a little bit younger, maybe like 21 to 35 or so, most of them don't even want to talk with a single man now unless they share the same politics. They don't even want to have a conversation. So a lot of these, especially in the D.C. area, where over 90% of them are hardcore Democrats who love Obama and Hillary Clinton and Bernie Sanders, they don't even want to have a conversation with anyone who doesn't have the same politics now. It's gotten that crazy anymore. It's gotten that crazy now, in the United States to that point. Now, I don't think every city is like this or every state is like this, but in certain areas, like certain parts of New York City or San Francisco or certain parts of LA or obviously a lot of DC, this is how ridiculous things have gotten. They don't even want to have an honest conversation. If you bring up, the debt, or we have to cut spending somewhere, you're a racist, you're a misogynist, you're a xenophobe, even for laying out facts and math that we can afford any of these things. I mean, look, Eric, we have the Oroville. The last thing I wanted to get before we get to the scumbag nominees, we have the Oroville Dam, right? So this highlights problems with U.S. infrastructure investment. There's going to be needed over $2 trillion spent to renovate, upgrade U.S. infrastructure, either new trains, bridges, dams, roads, etc. A lot of things. And yet the Oroville Dam, I listened to an expert podcast on this from Chris Martinson as the story was breaking a couple weeks ago. And basically the state of California could have spent $5 or $6 million preparing to upgrade the Oroville Dam on some of the auxiliary ways to get rid of the water. They didn't spend it, and now it looks like it's going to cost the state of California over $200 million to repair the Oroville Dam, and that's if the dam doesn't totally break. And the Oroville Dam, Eric, wasn't even on the list of dire infrastructure projects. And there was, over $5 billion, I think, of money spent there. So, that's just another economic landmine that we're going to have to deal with, that we've inherited over the decades from all this crazy money and debt creation.
Yeah.
And trillions of dollars in misallocation. I mean, look at all the money that was spent on the wars. Imagine if, instead of the $6 trillion, I think, that was spent in Iraq and Afghanistan on wars there, if some of that money would have went to infrastructure spending. We would have a pretty nice economy already. Not that I like central planning, but it would have been better than making weapons and ruining foreigners' lives and droning men, women and children.
No, the return on investment for what has been spent in the entire period of military warfare in the Middle East since 2000 has been very minimal. The amount of graft and corruption in the military is just unbelievable. Well, and they're even openly talking about how they have to make accounting adjustments north of $6 trillion just to reconcile their silly books because of all of the crazy stuff that they do. And contractors getting paid $200,000 plus or what have you to fill in for enlistees. It's a level of corruption that probably is greater than any other form of government spending today.
Yeah, I don't think the average American understands the amount of waste and corruption. There's a global bull market in corruption, Eric. I mean, it's not just it's not just in the U.S. I mean, I've read stories in different papers online from many different countries. So I think we have a bull market, unfortunately, in corruption, and it's at the government level, the high-level politicians, bureaucrats, a lot of large corporations that are connected to the money trough when there's so much easy money and credit from the central banks. Unfortunately.
Yeah.
Well, I want to get to now the scumbag nominees. We have a bunch of them. I want to show you guys. Some of you guys who listen to the show still believe in government and still believe in government agencies and regulators can do the right thing. Okay, so we have our first story. Was now the reports are coming out that the Obama Department of Justice illegally funneled tens of millions of dollars to activist groups. So, these are the activist groups that George Soros is also financing, that are doing violent protests. And, obviously you're picking political favorites. Government bureaucrats are not supposed to be involved in doing things like this. There's always, since I live right outside of D.C., Eric, I can speak about this more. I used to hang out before I woke up as a libertarian with a lot of these government people. I used to drink with them and party with them. And, the stereotype is that these guys are selfless, hardworking. They don't get the respect and thanks they deserve, government bureaucrats. And yet here are these stories about how inept and corrupt and skipping corners they do. It's really, really sad. So that's one. The other government bureaucrat story is we have TSA employees running a cocaine smuggling operation, including 20 tons of cocaine were seized. Eric, you didn't believe this when I told you this, so we're going to attach the link to this story. 12 current and former Transportation Security Administration employees facing charges, smuggled millions of dollars of cocaine through airport security in San Juan, Puerto Rico. 5 drug mules per flight were running the drugs. Over $30 million in cash was seized. This is a movie. This is basically a movie. And I have another story about the ATF, and there was a smaller smuggling ring for, evading taxes and selling black market cigarettes for over $20 million. So ATF agents were running, a group of them were running, an illegal black market cigarette smuggling operation to sell cigarettes for below the tax price there in New York to make extra cash to pocket. So we have that. Those are the bad ones with corrupt government agents doing that. Unfortunately, the Department of Justice, that's going to be a pain in the ass for Trump to clean up.
Yeah.
I'm really hoping that happens. But there's a lot of lawyers there. I've met some of them, unfortunately. But there's a lot of over the years that I've lived here. But there's a lot of lawyers in the Department of Justice who are hardcore politically biased. And they're gonna have to clean it up. It affects their decisions. The court system's like this too now, Eric, where you have hardcore politically biased corrupt judges. It's just like the Department of Justice, unfortunately, too. Last one we have is Spain is finally starting to jail their bankers. They've gone after the former head of the IMF for a corruption scandal. He misappropriated through embezzlement over 12 million euros from 2012 to 2013, and there's a few other bankers who were arrested with him. And then they also are busting these central bankers as well that were involved with this lying to investors that this small bank wouldn't go bankrupt. So losses of millions of dollars and euros for small investors. The bankers lied to the public and said that the bank would not go bankrupt anytime soon, when they in fact knew. Now it's been proven that the bank would be bankrupt in 1 or 2 years. So that's fraudulent because of their knowledge. So I'm glad that Spain is having some cojones, unlike some of these other countries. And when there is clear examples of fraud, putting them actually in jail for committing fraud, because the U.S. and other countries are not willing to put bankers in jail for committing fraud anymore.
Yep. Welcome to Dystopia.
Yep. Well, I'm glad Spain is stepping up here, but, Spain has a lot of other problems with corruption and high taxes, but at least they're doing this one thing right?
Yeah.
So that basically wraps up the show. I mean, I could also nominate the deplorable behavior by Democrats in U.S. Congress and the mainstream media for, how they're making Trump out to be a Russian spy. They're calling Jeff Sessions a Russian agent. It's just totally ridiculous without any real evidence. And yet we see, Democrats who have met with Russian ambassadors. So these guys are total hypocrites now. They've basically doubled down on the propaganda and fake news, Eric. It's really disconcerting. And, they call us the deplorables, but, I honestly think that these guys, like Jake Tapper and others, are the real deplorables.
Yep.
That's it for this week. This is episode 32. We're going to try to do them more frequently than once every month or 6 weeks. Thanks, guys. Mo and I are trying to raise $1,000 per month for our Patreon account. We have over 2,600 viewers per YouTube video, so if we can get most of our loyal listeners or all of our loyal listeners to donate $1 per month or up to $5 per month, which would be amazing, that would cover most, if not all, of the money that we need. So we also accept one-time donations if you go to the Wall Street for mainstreet.com website. We accept donations in cash via PayPal. Fiat, you can donate there. You can donate Bitcoin through our Bitcoin wallet there on the website, or you can donate gold and silver. We have a gold money account, and we also accept mailed donations of physical gold and silver. Thank you guys for listening, and we appreciate any and all help. Please forward it to friends. Okay, bye.